Good afternoon. This is Brian Split with Allendale here for your closing commentary for the week ending Friday, June 17th, 2011. We did have some mixed settlements today in the grain markets after a week of massive profit taking. And today we did have July corn did settle 1 1/4 lower at $7 1/4. That is down 86 3/4 cents for the week, but was actually about nearly 10 cents off of the low. We did have December corn finish 7 cents higher at 6.60 even, and that is down 52.5 on the week. The funds actually did buy approximately 9,000 contracts of corn today, although the period of Monday through Thursday they sold about 63,000. So overall for the week, that's 54,000 contracts of corn that the funds did part with. On the soybeans, July contract down 17.5 today at 13.33. The November contract down 17 at 13.33 1/4. So old crop and new crop trading at about even money right now. That July was down 54 1/4 for the week. The November down 48.5 for the week. We did have funds sell about 6,000 contracts of soybeans today. This is the 7th consecutive day of funds selling in soybeans, and that brings us to about 28,000 contracts on the week. On the wheat market, we did have lower closes for the July Chicago contract, down a penny today at 6.72 1/4. That is down 87 cents on the week. The July Kansas City contract up 6.5 at 8.04 1/2. That's down 63.5 on the week. And the July Minneapolis wheat down 3 cents today at 8.97 1/4. That's actually down $1.02 3/4 on the week. So big losses in that contract this week there. But again, we had a lot of selling. It started off the week early. Major concerns were regarding the European debt and failure to get that restructured. There was a little bit of talk that some of the ministers in Europe are really stating that we don't have any time to lose and we need to get this figured out as soon as possible, and that provided some support to a lot of the markets today. Along with that, we really have a lack of bullish rhetoric at this point. If you look at last week, we had a very friendly report, but since then the weather is really benign. Actually, you could say it's very positive for crop development at this point, so that's a non-issue. And it's amazing that we had this market $1 higher than where it is last trade here on the July corn just this time last week. With ideas that we were going to have a squeeze and that end users just couldn't get their hands on it. So very volatile market, and we expect that volatility to continue. Now, South Korea did buy 138,000 tons of corn and 165,000 tons of feed wheat, and there is more possible because they were tendering for 350,000 tons of corn and 220,000 tons of wheat. So we'll watch that early next week. Other than that, as far as outside markets, I just got a little note here that this cattle on feed report did come out bullish. We were up on placements. Let's see here. The placements being bullish, we were expecting the placements to be down 7.5%. The actual is down 10.8%, so that's friendly. The expected marketings were up 3%. They were actually up 7.3%. And cattle on feed was expected to be up 5.5%, only up 4.1%. So each category of that report being bullish. We did have a sharp rally into this report. Part of that in anticipation of a bullish report. But also part of that, the same thing that brought the grain markets down, fund liquidation. We've had a massive move lower in these cattle contracts, and with the funds getting out of cattle, that means that they need to buy. But short covering into this report, we did have the highest trade for the lead contract since May 16th. And with higher cash trading this week at a high of 109, that is the highest since 112 in mid-May. So we'll see if this report can keep that momentum going, or if we're going to see more of a buy the rumor, sell the fact type reaction. And the hog market mostly lower today. We did have the July up about 10 points, but August through December down about 30 to 50. We've had nearly 2 weeks of gains, so some profit taking going into the weekend, not unreasonable at all. The trade does still believe right now that the longer term trend will be higher with tight hog supplies still in the forecast here. As far as outside market activity, the dollar down 70 cents 7 points. And we do have the Federal Reserve meeting next week, so that could provide some volatility in the dollar index. We did fail at the 100-day moving average yesterday and on Wednesday. That is going to be resistance at this point, with the 20 and 50-day moving averages providing support at about 75.25. Other than that, as far as this Fed meeting, I think the market really is anticipating that rates will remain unchanged. I guess it's all about what type of verbiage the Federal Reserve uses in expressing that. As far as the equities, again, with the possibility of the European ministers working a little bit harder to get something going for Greece, we did have the equities react positively to that. The Dow currently up about 55 points in futures, S&P up 4.25. NASDAQ is down about 3. Crude oil down $1.94 today at 93.01. We're going to see key resistance there at about 95.20, and the support being down at the 200-day moving average at 92.25. But if you look at what crude oil's done this week, we had a massive wedge formation after that break in May. We've broken out of that formation to the downside, and that does project that we could see crude oil venture down to that $87 to $88 a barrel area. But we are looking at long-term uptrend support on the continuous chart coming in near $90 a barrel. So if this market does break through that level, we should find some support just below it. Other than that, metals were firm today with the weak dollar. Gold up about $8 at $15.40. Silver up 20 cents at $35.75. That is your recap for the week. If you have any questions on any of these markets, please do give us a call at 1-800-2-MARKET. That's 1-800-262-7538. Or feel free to check us out online at www.allendale-inc.com. And good luck trading to you next week. Thank you.